Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy that you can join us today. Before I get to today's guests, I'd like to thank our 2023 President's Council sponsors. And this is a group of companies that provide a tremendous amount of financial support for our association every year. And of course, all of these funds help support our association that we use to advocate for the industry before the California State Legislature and our regulators. We're very appreciative of our President's Council sponsors and the support they provide to us. This year's President's Council sponsors include AmeriHome, Arch MI, Consolidated Analytics, Funding Shield, Guild Mortgage, Accelerate, Rocket Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. And with that, I would like to welcome our guest for today. Welcome to Tom Gilliland with JLL. Hi, Tom.
Hey, Susan, thank you so much for having me. This is very excited, looking forward to our conversation and thrilled to be on the Connect podcast.
Wonderful. Thank you so much. I always like to get started with a little background. Everybody kind of has an interesting story how they came to the real estate finance industry. So tell us how you came into this business.
Yeah, absolutely. Happy to. And one thing I love about this business is all the various paths that people take to it. There's really no one size fits all approach. And that's very much the same with me. I think the first thing to say is, I grew up outside of Oklahoma City and really almost backed into real estate, straight into it from the perspective of I was one of the few people who grew up that was not interested in the energy industry, which is basically what most of my peers eventually go into. And I was also really always a numbers person rather than, any reading comprehension or anything like that. So certainly something I've worked on over time throughout my career because it's very important for retainment and the like. But I really gravitated to finance. And as part of that, always had an interest in real estate. I've always been curious. I had some family members in the business on the commercial banking side. And so I really always just found myself thinking about real estate and watching projects develop and things from that perspective. So really where that led me is at university, I did study finance. We really didn't have any real estate program to speak of. I think that's another thing that's been incredible the past couple decades.
Yeah.
I'm dating myself now, but watching the advent of all the real estate programs through universities around the country, but really had to look outside of school for any kind of real estate internships and knowledge and skill set. So I was fortunate to work on a few construction sites, really started at the very bottom of the ladder from, manual day labor basis and helping out general contractors. Eventually worked my way to an internship with an appraiser one summer, so really learned the appraisal business. And then right out of school around 2006, so a very interesting time period to get into the business, which
Oh my gosh.
I really wasn't aware of then. It's only now that I can look back and think about that was a really interesting time to enter the business. I started and I said, why wouldn't everyone want to do this? This is the most fun thing ever. So I actually started and indeed spent the first 10 years as a lender in the business. So I was a commercial real estate lender, writing both permanent loans and then construction financing balance sheet loans for various banks. About 10 years into my career, I really decided to make a very large pivot, moving from the commercial real estate lending side to the commercial mortgage banking side. So obviously a lot of same skill sets translate over and things from that perspective, but really my views on that were, having grown up and started my career during the great financial crisis and watching workouts and things like that, I really became a problem solver. That's something I love to do. And I feel that within our business, specifically in commercial brokerage, advisory, and mortgage banking, that's really what our clients hire us to do, is be a problem solver for them and craft solutions despite what kind of market environment we're in. So it's definitely a 180 from the perspective of where I spent the first half of my career to where I am now. But it brought me out here to California and brought me here today. So very, very happy with the decision and thankful for it.
Yeah, it's funny, isn't it? When you in our careers, I have some of this too, but it's like I'm sure that we were going, you're just starting your career, you're going through the financial crisis, you're probably thinking, oh my God, it's like you don't realize in the moment like how those skills you're developing at that time are going to benefit you down the road.
That's right, absolutely, and it's just so interesting how so much depends on the time period you go through that, what you take out of it, where you are, what desk you're sitting in, the experience. Your career can go 50 different ways depending on things that are ultimately outside of your control. And the most important thing is to just acknowledge it, accept it, and enjoy it along the way.
Yeah, so I guess this is kind of a point to be made for anybody who's listening that might be a newer entrant into the market. This
That's right.
might not be our best year this year. So speaking of that, 2023 has definitely been a rough year in the market. What asset classes do you see faring better than others for the next several months?
So that's the $1 trillion question that all our clients are asking us, and that we're working through day in and day out. I think the first thing to think about, especially from the perspective of the real estate finance industry, is a lot of the stress that we're seeing in the system, not just on the commercial side, but on the residential side as well, has really been a function of the Federal Reserve's fight against inflation. Obviously, everything that occurs in our business is very interdependent with the broader economy. And we've really seen a lot of stress in our industry just based on purely, rising interest rate levels, which, as most of us know, is incredibly important when it comes to valuation of assets and income streams, just based on how important debt is to our business. So we're kind of getting hit with a double whammy, or even maybe a triple whammy, with expenses are rising. Obviously, in California, we're very well of insurance crisis, cost of living crisis, always, things that we're thinking about. So it's not just, interest rates in the broader economy, but we really have some asset level things that we're working through here as well. Having said that, though, the one constant is, the industry is always changing. We're always running through cycles. So, the really important thing is to make sure you're positioning yourself for an eventual recovery. And a couple areas where I really see, both good information now and good tenancy and cash flow and the like, is the retail space, which continues to perform very well. Obviously, valuations have been stressed, and bid ask gaps have been stretched, based on the market. We see really fundamentally on the asset level, vacancies are still down, rental rates are still up. Outside of really the mall space, which has had its own struggles with the advent of online shopping and the like over the past 2 or 3 decades, we've really arguably have, the best environment for retailers and retail real estate than we've had in, a decade plus. So that's been fascinating to watch that industry really recover and become, an extremely viable asset class again. And then I think, I will definitely go out on a limb here, and we'll look either very wise or potentially very foolish in a year or two. I'm a massive believer in office. I can't think of a time in my career where an asset class has ever been viewed more negatively, had more negative sentiment towards it than office today. Obviously, there's a lot going on in the space, and there's a lot of chatter about permanent work from home and what companies are doing, what companies are not doing. Affects us in the Bay Area very much, but I think what you're starting to see is there's people that are making very significant moves. They're very early on, and I think when we look back here in 1, 2, 3, 4, 5 years from now, we're going to be amazed at some of the early movers and how smart they were getting back into the space when sentiment was so low as it is now.
Yeah, time will tell. And it is nice to hear that retail is coming back. You know, I'm an old lady, so it's like I remember like shopping in the malls and things when I was a kid was the thing. I'm like, oh man, if all these kids are only, online shopping, that's no fun. It's like, come on, get out there and be social. So that's good. That's good to hear.
That's right. Well, it's really the experience is what matters, right? And
Right.
we've seen that where the most successful centers are the ones that really, provide that focus on entertainment, on food and beverage, and really becoming almost a town center, right? In a
Yeah.
sense.
Yeah, it's an experience for sure. The real estate finance industry is always looking, and I think that I'm, happy to say that I think we're doing a good job of really being very proactive, but trying to increase diversity in this industry. What can you share with us about what JLL might be doing to attract younger mortgage professionals into your company?
Certainly. Well, it's a great question, and it's candidly really the defining question of our industry today. Is we're always looking for opportunities to attract and just as importantly retain top talent, and not just from the perspective of it's the right thing to do. It absolutely is the right thing to do, but what we've been able to see and what we all know is there's so much talent everywhere in the world that just has not had the opportunity in the past. I think
Mhm.
one of the things that's great about our industry is the connections and the opportunities that arise from people you know and people you grow up with and connections you make, because we are a people business, right? It's a very social business and it's a very relationship driven business. That's wonderful, but it can also put people at a disadvantage if they're coming from a different background, if they don't have as much opportunity. So we're very attuned and focused to that. We try to recruit across the spectrum from the perspective of finding talented people. And I also think that this specifically is a great sector where we can all work together. So our peers, our competitors, the lenders that we work with, we can all share best practices, because it is truly a situation where if we all do this right, it benefits everyone in our business over the long term. So one thing that we're very involved with personally, and I know a lot of our peers are indeed around the country and the world, is a group called Project Destined, which was started a couple years ago and really has provided over 2,500 students every year with internship opportunities, with networking opportunities, with analyst placement opportunities at commercial real estate brokers, lenders, investors, advisors, really around the country, Western Europe, throughout Asia. And it's really an incredible program where we can all come together and indeed provide opportunities for very gifted talent that might not otherwise find a role in our industry, or indeed might go on to do other things in other industries and succeed very well, but never really had that chance there. So we feel that's very important and something that we put a lot of pride and time into. But just as importantly also is retainment. Talent retainment also very important. You can do all the recruiting in the world, but if you don't work on your culture, if you don't work on cultivating that day in and day out, you're not going to be able to indeed retain talent for the long term. So we also spend a lot of time thinking about our culture, in our local offices around the country, indeed around the world, how we all mesh that together for inclusive workplaces and really just fun environments, frankly, where we can all thrive.
That's it. That's a great point. That sounds like a wonderful Project Destin. Sounds like a wonderful program. Kind of leads me into my next question, because younger professionals appreciate the use of technology at work. I have been in this role for quite some time, and it seems like it's only been in the last handful of years where I've seen an increase in the use of technology in the commercial real estate space. So what's your take on how this industry is adapting to the use of more technology in your transactions?
Certainly. Well, love to provide my perspective. And the only caveat for listeners and viewers that I'd add is we were joking before we started recording that I couldn't get my volume to work here. So luckily within record time, within 15 seconds, I got it fixed. So, but I do have some thoughts and hope they're well informed by interacting and talking to people much smarter than me. So, one thing I'd say, and we touched on this a little bit earlier, is our industry is so interdependent with the broader economy, with the broader world. And, without a doubt, especially as I sit here in the San Francisco Bay Area, is technology has really been the defining theme of our economy and this generation growing up the past 2 or 3 decades even. And so, what I've really seen is, the commercial real estate industry has always been a little slower to adopt new technologies, I don't really think that was on purpose or anything from that perspective. I think it's just always been a challenge where, candidly, the residential real estate side of the industry has really been a leader, in the broader real estate world from the perspective of both from innovation, from efficiency standpoints, and things from that perspective. I will tell you that technology and providing efficient processes and new improvements, it's on everyone's mind. It's top of mind. JLL, anywhere else you go, we have our own technology division. We actually just released JLL GPT, which is the first kind of chat GPT for real estate.
Yeah.
It's been really fun to use and something that's brand new. And over time, as a global real estate service provider, it all comes down to allowing our clients to operate their business more efficiently, operate their buildings more efficiently. With 103,000 employees around the world, it's really a duty of ours to make sure our clients, have the latest innovation, have the latest technology, where we can be good stewards for the environment, good stewards for society. So it's something that we're working on day in and day out, and I try to keep up with it as much as I can, and certainly am excited about it. So.
That's impressive. Way to go, JLL. That is cutting edge for sure. One of the questions I wanted to also get your feedback on is just the role of mentors. I a lot of these podcast interviews, people really have a passion for mentorship, or there's one person in particular that's really moved them. What can you share about maybe a mentor at any stage in your career?
Certainly. So, what I tell you, one very important thing, whether you're just starting out your career, whether you're through it, whether you're looking to make a change like I did in the middle of my career, don't try to do it on your own. I have always been amazed at leaders within our industry who are willing to spend significant time mentoring the next generation, providing honest, candid, open feedback. And what I've found is, the more that you put into seeking out mentors, both internally, both externally, it's just amazing what it can do for your career. So, very early on, I made sure to find, mentors outside of my workplace. And really that was for a few reasons. Is one, you can always be very candid about the challenges you're running into that you might not be able to with your direct boss or something from that perspective. And you can really just talk through anything you want with them in an environment that's most conducive for you. So I think that's something that's very important. I know it can be uncomfortable for someone just starting their career to seek that out and still trying to get their feet wet and figure everything out. But I think that's so important in our industry. And then I also think just work ethic, what we do, it's not rocket science, but at the same time, it's showing up. We talked about earlier, we're a relationship business. So, one thing I really like about the industry is we're not really conducive to working from a home office or something from that aspect. We love being in the office. We love collaboration. We love that kind of culture of sharing. So showing up, putting the hard work in, will get you noticed and will really do wonders as you build your career.
What advice would you give somebody just starting out in their career in this industry?
So I think besides a few of those things about networking and about mentorship and about, time in the office and things from that perspective, I think one thing is, don't lose sight of the bigger picture. So you have a lot of work to do. Your day job can be very stressful at times. We like to say we're in the time management business. So you have 24 hours in a day, you have 7 days in a week, and no one can change that, right? So you have to be very careful and very certain about where you spend your time day in, day out, week in, week out, month in, month out, as you build on that throughout your career. So, in addition to, working really hard, finding the mentors, don't forget the bigger picture of, your peers in the industry. They, like you, are the future leaders in the industry. You plant the seeds now, you try to create a lot of great relationships, and then before you know it, 10 years down the road, you're friends with the decision makers. And as you're the decision maker, at a brokerage shop or at a lending shop or at a principal side shop, you'll be able to work with other decision makers in the industry. So I think it's so important to just balance all of those things together to make sure that you're ultimately going to be successful.
That's great advice. Definitely a relationship business. That's great advice. You never know where everybody, where all the people that right now are going to be in 10 years. So great advice. And Tom, we are going to be able to be working a lot more together now. You've just joined our board of directors. So I'm really grateful for you volunteering to help lead our association and look forward to working with you. Of course, we've got our big Western States CREF Conference coming up here in just a couple of weeks. Can't believe it's already that time of year. What can you share with our listeners about the importance of the commercial real estate industry supporting the California MBA?
It is almost September. Summer's flying again this year. I'll tell you what. Yes, it's been unbelievably exciting to join the organization. I'm so glad that I was afforded the opportunity to join our board of directors earlier this year. We've got a wonderful group. Obviously, you and your team who are running the business day in and day out do so much important work for our industry. What I would tell my colleagues and my peers in the commercial real estate space specifically is don't forget the importance of what we're doing as an organization. I know a lot of people in our space can maybe think most of the state policy, rules, and regulations are more geared towards the consumer-facing residential industry. And I think in a way it can almost hide how that can really impact the commercial real estate industry from the perspective of, even well-intentioned good policies that are appropriate for the residential side of the business could have horrible unintended consequences, right, for the commercial real estate side of the business. That again is no fault of legislators, is no fault of staffs. It's really just, we really exist, and a big part of our job is advocacy and advocating for policies that are great for the industry, great for consumers, great for borrowers, great for lenders, vendors, what have you. And so that's why I think it's just so important to realize that yes, we have a lot of talented people here, but it takes everyone. It takes all of us. It takes your support in order to be able to go talk to legislators, go talk to staffs, go run conferences where we can talk about these important discussions and get panelists together and think about what we need to do today and what we need to do in the future. So I would definitely encourage my colleagues who may be on the fence, who are thinking about it, that it is extremely important and something that we take very seriously as far as our stewards of being on the board and advocating for our industry. And I'd encourage everyone to kind of join in and become a part of that. You mentioned Western States. Lastly, that's the big commercial real estate conference for the West Coast. Do I really have to twist someone's arm to come to Las Vegas for 48 hours, to sit there and talk with the movers and shakers in our industry? But it's going to be a fantastic time. It's the first week after Labor Day, and it's just an incredible opportunity to get together. 48 hours of just nonstop rock star panels. Every lender will be out there, advisor, vendor, service provider, you name it, borrowers, owners. So it's going to be a lot of fun. And like every year, I really can't wait, Susan.
Wonderful. Thank you so much, Tom. I appreciate your comments. And yeah, I will see you here in just another several days at Western States CREF. Thank you for being on Connect.
Absolutely. Thank you so much. Take care.
And thanks to all of you for joining us today. You can access any of our past episodes to follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.